We have first quarter earnings results from Zoom, fiscal first quarter for this company. I'm Cory Johnson, Chief Market Strategist for the Futurum Group. And this was an interesting quarter because things didn't get worse for Zoom. And with the stock trading at $64 a share or so, this was a $400 stock a few years ago. So they're still trying to kind of make up some ground from where they were once. So let's look at the business story behind this stock on the move. Of course, Wall Street just likes a beat or a miss, and this is a beat, barely. Earnings per share about up 16% on a year-over-year basis, 13% maybe better than estimates. Revenues, only about 3% increase on a year-over-year basis. But again, we want to dig into the business here, not just the beat or the miss. Here's what the business actually did. So in the quarter, as I mentioned, 3.5% increase in a constant currency basis, or $1.1 billion in revenues. Their enterprise revenues, and I think this is the big story here, of $666 million. Yes, 666, the sign of a good quarter, not the beast. Enterprise revenues is so important for this company, up 5%, because those are the best customers. They pay the most money, they have the best margins, and when that's growing faster than the rest of the business, it's a good sign for Zoom. We'll look a little bit deeper. The biggest customers, we mentioned enterprise customers of all kinds are doing well, but the biggest customers, those customers spending over $100,000 a year, are growing even faster at 8%. So think about that, 3% growth for the whole business, 5% growth for the enterprise customers, and 8% growth for the high-paying enterprise customers, where of course the margins are great. So when you start to look at the income statement that of $1.14 million in revenues, you see gross profits are good. Well, of course, it's basically a software business. But R&D, they're able to spend a lot of money in R&D, 18% of revenues on that. Other expenses, whatever, but they end up with a 17.8% operating income. That's really good. What do they do with that money? They go back and they buy back shares. And so it's been kind of impressive, making the product better, buying back shares. The revenues growth, not great, but not bad. But they're using the free cash flow they're generating to buy back shares, and that is a good thing. So when Wall Street looked at these numbers and it came out, the stock sold off a little, then it rallied in the morning. It's kind of flat from where it was. And for the year, the stock's down 7%, which is not great. But my favorite part was in the conference call where the founder and CEO of the company, Eric Yuan, talked about what the competition is doing out there, right? We all get these emails saying we got a Google Meets call, we got a Zoom call, we got a Microsoft, God forbid, a Microsoft Teams call, we got a WebEx call. What are the competitors doing and what's it mean for pricing?
Overall, I think only one competitor, they bundled the solution together, which is Microsoft, right? So over the past few years, right, for sure, there's some, impact. You already saw the number over the past several years because there are bundling strategy. However, you look at, our installer base, like a year ago, right, we increased the online price and, we do see a very positive feedback. Customers really appreciated our service. And also look at our, the installer base, and a lot of customers really like our service. The reason why our customers' employees, they like Zoom. They truly enjoy using Zoom, right? When they use other competitors' product, guess what? They do not like it, right? Even if the bundled, the price is sort of free. However, when customers, they deep dive, they look at the total cost of ownership in terms of support cost and AI cost. Guess what? I think we're much better positioned now. That's the reason why I think, not like every time we talk customer always, challenge us, hey, your price or those kind of things. Customers really appreciate, right? They want to deploy the best breed service. That's the reason why we did not see, the big, price pressure, over the, at least in the last quarter. And I think we maintained our price, the strategy very well.
Yeah, I'm not a Microsoft Teams fan either, but maybe that's just me. I don't know. What's it all mean? What's the big earnings takeaway? What's the big drill down bite? The one number that tells us a whole lot, I'll have that right after this.
The drill down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
Our fiscal first quarter numbers from Zoom, they were 3% growth in the business to $1.14 billion. And nice operating margins of 18%. We went around correctly. But I thought the most important number, the drill down earnings bite, was 5%. Because the enterprise business, which is so important to these guys, it's their most profitable business, enterprise going at 5% when the rest of the business is growing at 3% shows you that they're getting the most out of the people they want to get the most from. And that's good news for Zoom. All right, thanks for checking out Drill Down Earnings on X. I'm at Cory TV. You can check us out on TikTok and on Instagram at Drill Down Pod. And of course, Futurum Group's YouTube page has all kinds of great stuff with the most important things going on in the world of tech. All right, Drill Down Earnings, part of 6.5 Media.